The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, looking at Tuesday's trade, plenty of red in the grains and oil seeds. What exactly happened? Was it one headline or another, or combination of factors? It was also a lower day in the hogs, while cattle had another up day, so at least some positivity here, but just felt like mixed signals across the trade as we're nearing the end of the month of April. Let's talk about it. Joining us for a conversation, Jim McCormick with agmarket.net. Jim, welcome back to Market Talk, and good to hear from you again. And before we jumped on air, I think both of us were kind of scratching our heads here. It was a bit of a perplexing trade on Tuesday across the board.
Hey, good afternoon, Jesse. Thanks for having me on. And yes, it was kind of a perplexing day today. I know a lot of our clientele were calling us saying, what is going on? What is causing this kind of a pretty hard correction across the grain complex? And as you mentioned, I don't think there's one hard headline that is driving it, but I think there's multiple headlines out there. And the one I think that may be having the most impact is there's a lot of talk on, you just Google it, that we're close to getting a trade deal done with India. Now, if you look at it, Jesse, the stock market's rallying on positivity of it, but the grain market may be breaking, because if one of the articles I was reading was pointing out that this trade deal is going to be more of a framework. And essentially what they're doing is they may exclude agriculture, as in phase one, phase two, because agriculture is a very touchy subject for India. And it's essentially for the reason is, folks, is it's President Trump is putting tariffs on to try to defend and try to bring back manufacturing production into the United States. Well, India is very leery of their politicians in rural India of allowing U.S. agricultural products into India, due to the fact that it could essentially run the India producer out of production. And that actually may be the best reason why, Jesse, the more we talk about it, as to why we're under pressure, because you notice bean oil was down hard. There's a lot of people that think India will become a big buyer of U.S. bean oil. The corn market was down hard. Wheat. India doesn't import a lot of wheat, but at times they do when they have shortages. Well, if we had a trade deal, maybe our wheat would get first preferential. Wheat market was down. But you also look, some of the other, pretty much anything we plant, cotton, rice, they were all down under pressure. And that makes sense to me, where essentially people are saying, hey, look, we're going to get a deal done, but it's not going to involve agriculture. And the agriculture sector essentially sold off on disappointment, where the equity's seen a little bit of a rally on maybe a little bit of relief that maybe this is at least the first of multiple trade deals that, quite frankly, need to get done.
That is the best explanation I've heard here yet today. I mean, case in point, you mentioned it, bean oil. We were down over 100 points, and really bean oil the last several sessions has kind of rallied on some of those ideas that we could see a trade deal with India in particular. And, you bring up a good point here. For years, I've heard a lot of people talk about how India could be our next China type boom when it comes to ag products in the U.S. And there's been a lot made of this potential here, but I've also heard from some folks who are in the camp that pump the brakes a little bit. A trade deal with India for ag products might not be as fruitful as some may think. So I just wonder, all this smoke, all this noise, coupled on top of, okay, it's been 100 days of the Trump administration. They need a win. They need a deal. I think it's just a lot of mixed messages overall at the markets right now, Jim.
Well, there's no doubt about it, and I'm going to point out, I'm in the latter camp. The reality is, if you look at India, they've got the population of China. There's no doubt about it. But if you look at their religion, they're not big meat eaters. In India, so what you're looking at is more of a potential of exporting grains and oil seeds. Like I mentioned before, they are pretty much self-sufficient in wheat unless they have a production problem. They don't feed a whole lot of livestock, so there's not a huge demand for meal or corn. Bean oil, veg oil is the one thing that they need demand of. And that's interesting enough. The one thing we really don't need, in my opinion, if we get these extensions of some of the rumors of renewable fuel mandates increasing,
Mhm.
Bean oil wasn't the product that in the long run we have a problem with trying to figure out what to do with. It's meal, because that is where we're going to have the byproduct if we really start ramping up production of renewable diesel, but in essence. So I wouldn't look for India to do it. Now it's going to be interesting to see in these same articles, India wants to essentially replace China as the supplier of cheap toys, cheap electronic goods. And it'll be interesting to see how that plays out and what kind of trade deal Trump can get. Because remember, Jesse, he did an interview over the weekend suggesting he would call it a win if anything imported into the United States was tariffed at least at a minimum of 10% to 20%. So that is going to be a 10 to 20% tax on the American consumer that's importing it. And that is going to have a negative impact on the market potentially down the line. But yes, he is also looking for a deal. He is 100 days into his administration, and the pressure's on to get one done. And I think you get the one done, then maybe they can use that as an outline for the other ones. But like I said, the rumor has it they're very close to India. We'll see.
Yeah, we'll see. And we could go down the US-China rabbit hole too. This whole trade war, this tit for tat, it's kind of felt to me like, yes, we want to get these other trade deals done, but it's almost felt like the end game here has always been China reigning in China, trying to hurt them economically, maybe. I mean, to me, that's what it's felt like is the end game of this administration. And I'm no expert. I'm not in the room. I don't know. I'm just hypothesizing, but that has seemed to be the big storyline that's weighed into these markets really over the last month, Jim.
I would agree with you. I mean, there's definitely some China hawks right now, Jesse. There's no doubt about it, that are trying to do their darndest to try to slow down China's economic growth, their military growth. They believe they are the biggest competitive to the United States. If you look at it, China is probably going to be the last deal done. But the hard part about it is they're also the biggest, buyer of U.S. beans. So it is going to have a huge impact on American agriculture right now. So, in my opinion, I think, like I said, China is going to be one of the few last ones to get done. In the meantime, it's going to get pretty bloody, I fear. I mean, if you listen to what the big box retailers are telling the White House just this past week, it's not months, it's weeks. And we're going to start seeing prices start going up, and we're going to start seeing essentially empty shelves. If you remember, Jesse, most people, there's a debate why Joe Biden / Kamala Harris lost the election. But a lot of the people point to the cost of life. Inflation was around 20% between when Joe Biden was elected to when he exited the office. Overall inflation netted out at about a 20% increase. So essentially, anything that you bought on average was 20% more expensive. And I think what the Chinese are waiting to see what happens is, to the American public, is what happens here in 60, 90, 120 days when that product that used to cost $20 is now going to cost you $45 plus due to the 145% tariff. So, right now it is a game of chicken, but it has also caught the economy in a very tough situation. Because the brutal reality is we did not get into this problem with China over the last administration. We didn't get it involved in Trump's first go around. This has been going on for 30 years since they got into the WTO back in the mid 90s. We're not going to get out of it in 30 years. Because right now, the biggest problem is there's machinery. People say, well, bring that machinery and make that product at home. The problem is, to get the machinery to make the product at home, Jesse, guess where it's made? It's China. So if you're an industrial, you're a business owner, you're trying to figure out where you're at, you can't do it. I've talked to several CEOs of some pretty big companies that are saying they're froze at the wheel. Mm-hmm. They cannot make any economic decisions because they have no idea what that products are going to cost if they need to bring in a certain piece of machinery. They don't know if Trump's going to put the tariffs on only to take them back off. There's just so much uncertainty, and that is going to freeze the U.S. economy, I fear, the longer this drags on. That's why this India deal is so important, I think, in the Trump administration's eyes, is they need to start making some deals. But, the big whale is going to be the Chinese market. The big whale is going to be that for the United States bean demand in the long run. That may be a while, I fear, before that whale gets reeled in, because, like I said, I think the Chinese are going to try to wait us out and see how the American consumer feels 6 months from now as we go into Christmas. If we're paying 145% tariffs on toys, it's going to get really expensive quick.
And I think all of this, it just adds to that uncertainty when you think about from a commodities perspective. I mean, the risk management side of this, it just adds to all the uncertainty. You throw in things like weather and planting progress and more, and it makes for a bit of a tough environment, right, Jim?
It does. Like I said, there's and a couple of the points. I said we dove into the India story, and I said I think that was the big anchor. But planting progress that came out last night, we are ahead of pace or right on pace for getting it planted. The maps I've seen, talking to weather guys, if you haven't got planted or you've been slow to get going, if you're in the central east part of the Midwest, it is going to warm up. It is going to dry out. 6 to 10 days calling for that. The 8 to 14 days calling for it. The private guys are calling for it. We are going to get this crop planted in a relatively quick time period, it looks like. So I think that added a little bit to the pressure. Technically, we took out some moving averages. That accelerated the selling, and it is first notice day. If you are long May corn and you didn't get out by today's close, you are risking not even May corn, any May contracts, I should say, you're risking delivery. So we saw some liquidation in the May contract as well. So it was a combination of everything today. And, but the one thing I'm also going to stress, the weather guys I'm talking to, Jesse, keep saying this wet spring, and it's been a little bit wet in parts of the country from March and April. I said, hey, that was in the maps. The real question is, as we transition from spring to summer weather, are we going to transition too much, in essence, to move into July, August, a warmer, drier pattern, which is what some of the longer range maps keep hinting at.
Jim McCormick with agmarket.net joining us here today for market analysis. And, within some of those markets, you mentioned some of the moving averages and more. And first notice day, we had a little bit of intermarket spreading going on, it felt like, as well. And I think in particular, what was interesting for me, you look at corn, beans, okay, kind of a pullback there, but the wheat market, that's been so beat up here as of late. We got some good rains in the southern plains, the central plains. Conditions ticked up here this week. And, you look at a lower U.S. dollar, for instance, and you look at wheat, you would think, okay, why isn't this market rallying? That one has been a perplexing complex to me as a whole, Jim.
It has. It's been very frustrating for me. I will fully admit it. The wheat has gone a little bit lower than I thought it would. I thought we'd catch near the lows. We're making new lows. The funds are short wheat, Jesse. They are just, it is just relentless right now. They are just pounding it. Like you said, some of it is weather, although I would say parts of the maps, if you look at the GFS model run, it's kicking out way too much rain. It's kicking out 7-8 inches of rain for parts of the wheat belt. So they may be getting too much of a good thing in essence, because some of them really do need moisture. The weaker dollar, I do think this wheat market will eventually turn the corner. Is it a deal with the Indians that do it potentially? I don't know. The funds, I think, are building this massive short position. They historically will rotate out of that eventually. But right now, all I can tell you, it is massively technically oversold. And hopefully that's a sign that we're close to the bottom.
How about over in that cattle complex, Jim? Another good update there. And I mean, here we are again, this cattle trade. It just feels like a market that can't go down, won't go down right now.
It can't go down. It seems like it's the word won't go down. Cash cattle market continues to push higher. April contracts are going off the board tomorrow. Then we're going to see if the June contracts can play catch up to the April. We know the supply is tight, Jesse. There's no doubt about it. But, the Packers, they are bleeding red right now. And I know when I've been on this, I know you're tired of talking about it, but I'm still going to point to the consumer. The consumer, I think, is the wild card right now. Consumer confidence is going down. That is a red flag. There was another story out there saying one survey, now it's just one survey said 74% of Americans are living paycheck to paycheck. Okay. Now think about this, what we're looking at. 74% of the country is living paycheck to paycheck. As President Trump gets his way, remember, he told Time Magazine a win for him is 10% tariff to a 20% tariff on anything that comes into the market, or it comes in the United States. So if you average it, let's say it's a 15% tariff on every product coming in the United States, your cost of living is going to go up 15%. You're already living, 75% of the people in this poll are saying they're living paycheck to paycheck. Unless their boss gives them a 10, 15% pay raise, which more than likely is not going to happen. UPS just said they're going to lay off 20,000 people, by the way. That is a red flag for this cattle industry, I believe, because we know the market's holding up on tight supply. But if you start getting a crack in demand and people are getting laid off, or you're seeing these higher tariff passes start to flow through into the economy, that could be the one thing that actually finally breaks this cattle market that's been on one heck of a run.
Well, and, at what point does the cash cattle market in particular falter here? You think about the consumer demand and more, but, cash has just continued to run hot, and you hear stories of, folks passing on certain, bids in the countryside. I mean, at what point is enough there? And, I haven't seen that yet, Jim.
I wish I knew. Tell me the day before, please, because I think, you will get to the point. I mean, you got to remember, Jesse, this comes back to the very basics of what drives the market. There's two things that drive the market. It's fear and greed as a net. When it's all said and done is what life comes down to. Right now, their market is just continuing to go up. The cash guy is, the cattle guy is feeling good. The cash market is hanging in there. But you're going to get to the point where the end user, the consumer says, enough's enough. I can't buy it. And then there's one day you walk into the grocery store and essentially, all of a sudden, there's no one there to buy the product. And you get to the point, because that's the goal of raising prices. When supply is tight, what the goal of the market is to raise that price as high as you can, to squeeze every last dollar out is the goal of the market. It's the Gordo Gecko thing. Greed is good, but you get to the point where greed oversteps it, and then you're going to get a nasty correction. And just like the wheat, the funds are massively short wheat. They all run to you give them reason to get out of the wheat market, we're going to get one heck of a rally in the wheat. On the other hand, they're long a lot of protein. They're long this cattle and feeder cattle. If you give them a reason to get out for the belief that all of a sudden that consumer is no longer there, the old line in the livestock industry, it is an elevator up and it's an escalator up and an elevator down. So, I'd recommend, if you're a producer of beef, cattle, don't be afraid to buy puts to protect it into this time of uncertainty, which is high.
Yeah, I couldn't agree more. Jim, this is always a fun conversation when we get you on the show. Final thoughts, anything you would leave folks with, reiterate to them from a risk management standpoint or whatever the case is, what would you leave folks with today?
Definitely a tough day in the agricultural side, especially in the grain complex. We are building into a very volatile time period. I know you're busy right now planting grain, getting your crops in the ground, but, try to figure out your break evens and all that. Be prepared to market grain when you have the opportunity to make money would be my recommendation. But, you need to be flexible this year. There's going to be a lot of uncertainty, a lot of emotional movements. So there's going to be opportunity. Don't be afraid to take it when you got it. Book the profits, but definitely keep that position or that market plan a little bit flexible. Trump administration could maybe throw us some surprises on some trade deals. We'll have to see. Time will tell.
Jim, if folks want to have a conversation with you and the team there at agmarket.net, take a look at all of your intel and more. I know it's as simple as going to the website, right, Jim?
You got it. That's the easiest way to go. If you're interested, hit contact us, but agmarket.net. Go there, sign up for a free trial of our research, take a look at our app, and let us know if you got any questions.
Jim McCormick, agmarket.net. Always great to hear from you. Have an awesome week, and we'll talk to you again real soon. Appreciate it.
Thanks again for having me on.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@markettalkag and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.